Good morning, Ernie, Micah, Matt. All right, let's go over the setup. Let's go over gold, Gerald. Okay, yesterday, play last night's video. We have 50 videos now. Every 2 weeks on with JSignal, we do videos on how to trade the system, the JSignal system on your own Ninja charts. And yesterday, I went over, I'll put over top of gold here for you, Gerald, so help you out. We went over how to trade a symmetrical wedge. So here was yesterday's trade on crude oil. Got over top of gold right here. That was yesterday's trade. Play that video. It got below low value area, broke out of a symmetrical wedge, and then had a nice retracement. There was a huge short on gold yesterday, crude yesterday. A really nice projection that worked out great for us. So play yesterday's video. There was a big breakdown. Here's a first retracement, and it caught a big runner. So I go over M tops last night for about 20 minutes, and I go over W bottoms, and I also go over how to trade symmetrical wedges with JSignal. So play that video. It will be labeled as 7-1, July 1. Play July 1. And that was a number 3 setup on crude oil that was projected yesterday that worked out just gorgeous. So that's JSignal. Okay, so play that video. Gerald has it labeled 7-1. Let's go over the number 3 on the black charts. We know how to trade JSignal, right? You get below low value area, such as here, and then you look for the first retracement on JSignal, right here, right? And look for the fib dots, and then we go short. That's how we trade the JSignal, called a number 3. There's only one setup we need to learn called the number 3 setup. Well, there's also the same setup on the black charts. The black charts over here, I got more price-based, more volume-based profile. It's been working since 1985. 30 years, the same exact setup, and it worked again today. Price profile, volume profile, called the exact number 3 high on gold. Let's show you how we do this. Same thing happens on crude oil with trend. The first thing you do with these black charts, what you have to understand, is you have to establish trend first. If you don't know your bias, you're done from the beginning. So you got to know your bias. Because on these black charts, I do not counter trend trade these black charts at all. I only buy and sell trend retracements. If you noticed yesterday, I projected 72 to 72.5 as a high at 8:30 in the morning. Sure enough, later on in the session, that was the high, had a big tank. Same thing, that was called a number 1 trade. Well, if you look, let's take a look at the black charts. Here's how we do this. So yesterday, the projection was 72.5. What I recognized was the market was in a hard downtrend yesterday. So at 8:30 in the morning, I said, let's look for a number 1 trade right at 72.5, 72 to 72.5. I had price profile, and I also had the hedge right at that level. So at 8:30 in the morning, right about here, that was projected to sell that high. Once it got at that level, you get within 2 ticks of that level, okay, you're allowed to take a pull-in bar. The pull-in bar caught the exact high once you got to that level. So once you get within 2 ticks of that level in the number 1, you look for a pull-in bar, okay? So what happened was there it is. We come up, and you get a pull-in bar. Here is a projected high. At 8:30 in the morning, the projected high was all the way up here. There's our projection at 8:30. That was the projected high. So right when you get up within 2 ticks of that high value area, you want to look for a pull-in bar. We only trade off of a doji or spinning top. Right there is your spinning top. It's got to close below it. There's the body candle close. So that's how you do it, number 1. Number 1 are retracements with overall trend direction. Trend direction was down. And this is called a shark bite trade. What a shark bite trade is this. When this little moving average, a smaller moving average, gets out of alignment with the larger, they were running parallel earlier, and then it starts going vertical. Once that smaller moving average goes vertical and you have big space, that's why I said 72 to 72.5 would be the sell. Sure enough, the shark bite worked exactly as planned. It went from 1167.5 all the way to 1172.5 and gave us a pull-in bar right at the high and gave us a big trade. And that was the high of the morning session. Well, today, that's a number one. You try to sell retracements to HVA or LVA. I mean, HVA and downtrends. Well, today, this morning, right, it never hit HVA or hedge, right? So what happens when you come down to low value area? You don't buy low value area in downtrends. What you do is you look for a break of low value area. It happened twice. It's 2 for 2 this morning off my black charts. One exactly to the exact tick. There, this morning, it broke low value area, retested low value area. Once it comes within 2 ticks of low value area, look for a pull-in bar off your 3-sim Renko. I'll show you how to do. So there's your first number 3 setup. There it is. There's your first number 3. Then it comes down to low value again. It cannot get to HVA. The market's way too weak in gold. That's okay. We don't have to come up and hit HVA like we did yesterday, calling the high, because we'll let it break low value area and get a continuation trade. So then it comes down, cannot get to our high value areas to sell, which is called a number 1. So these would be number 1 trades up here, right? This is a number 1 up here, number one hedge. Just doesn't get up here. This hedge right here, this dash line and the HVA is number 1. So it can't get up here. So this is our number 1 trade. It's a deep retracement with J signals. So we can't get up there. So what do? Well, the rules state very simply, we got to break below low value area again. What's the market do? It does exactly that. It's such a pretty trade. Once again, the system nails it. Same setup, been working for 30 years in the market. There's your break. There's your gorgeous retest within 2 ticks. I'll show you how to do a pull-in bar in a second. And there is your continuation. That's your second number 3 that's happened in gold since midnight. It just happened to get us in the trade. So you can see on the black charts, there's only 2 trades that we trade off of. We trade either number 1 or number 3. That's all you need to learn off the black charts. On J signal, you only trade this continuation pattern, which is number 3 that caught that huge move in crude yesterday. Please play July 1st private conference calls if you want to understand how to do that. But if you notice, when you do these guys and gals, you got to make sure that you play off profile. That's a key to the system. Whether you trade J signal, you're waiting for a break of HV or LVA. Black charts, you're waiting for a break of LV and downtrend or retracement to HV and downtrends. So that's it. Now, what's kind of cool about this, here's price, right? Check out volume profile right beside it. It's the same exact setup, isn't it? Our number 1, we're in a downtrend, moving average in a downtrend, was up here. Market's too weak, right? It can't get up there within 2 ticks to sell it with the pull-in bar. Too weak. That's okay. We're smarter than the average trader about that. So what we do, we look and we try to get the number 3 all the way down into the news. Now with the news spike, right, you always sell the number 3 right before the news and we're good to go. Because you're getting a spike with the news is coming out right now. So the next major resistance, right, would be into your high value area. So that's how you trade these things. You trade off high value and low value area. If it's in a downtrend, you just look to sell the first test of high value area or let the market break, retest off of low value area. And that's all we do. That's all we do every single day. Because look at the reaction you get even with news off of high value area, off the number 1. Right? You get a reaction off of that. Look at that. Look at the number 1. You're getting the reaction off the test area, off the tested area. The 2 major resistance areas are 1161.47 and then right here at the hedge, 1164.5, 1165. Look how we reacted right off of volume profile again after the news comes out. So what do? You look for a pull-in bar. Market comes up, green bars, we don't care about green bars, don't care about green bars. We're going to look at the blue or the doji. There it is, blue spinning top or the doji. There's your pull-in bar right here. So after news, my profile calls the move again if you want to get in that trade right there too. Right after news, about 19 seconds after the news is released, look how my profile nails the high. Look how it stops it right there. 1161.5, nailed it. So the profile has not lost on the black charts this morning yet off of the black charts using the pull-in bar technique once you get into that level. So you had two shots at it. You had the pull-in bar technique over here on the number 3. Once you broke below LVA, right there, and then that's the number 3, right? And then you get the number 1 after the news. That's how we trade the black charts. Really good way to do it. Now, if the market wants to come up to the hedge and give us a pull-in bar, be another setup. All right?